All right, guys, welcome to the trade recap. This video is just going to quickly go over the trade that we ended up taking, and this was pretty much the trade I ended up alerting here within the Discord chat, and that ended up playing out, and I ended up closing this for actually about $1,200, or very close to $1,200. So let's break down this trade recap, and let's break down why I didn't want to take longs up to the previous day high. So the main thing that I was looking at here and the main thing that I wanted here was I wanted NQ to come down and sweep the previous day low. Because if we're looking at price action today, let me go ahead and replay this for a little bit on NQ. Let's ignore the ES chart for a second here. So obviously today we actually had a CPI report at 8:30. So if I go to the 15-minute chart, you'll see over here I have the previous day high and previous day low marked out, right? If I take out the fib, pull it from the previous day high to the previous day low, you'll see that we are in a premium and we actually have this internal structure, right? So CPI pushes up to take out that internal buy side that is in a premium of the previous day range. So when we're range trading like this, and especially in between like a previous day range, we want an extreme to be taken out. So we want the previous day low or the previous day high to be taken out. Obviously, I don't really tend to trade until market open in about 15 minutes to 30 minutes after that. So what I'm watching here and what I'm looking out for is either the previous day high to be swept or us to sort of change delivery here on the 5-minute chart to show willingness to go to the previous day low. So obviously right here where I'm hovering over my mouse right here on this candle, it's 8:55. So I'm going to wait for market open, and market open is actually right here. Okay. So obviously we have, we're respecting bearish PD arrays and we're filling this huge 5-minute imbalance, and we're pretty much going for that data low, which is the CPI low, right? The 8:30 low. So usually when we have CPI, it's usually like a two-stage delivery, meaning that we'll get that Judas swing at 8:30 and we'll reverse all the way back down to that CPI low. And right in close proximity, we actually have very nice relative equal lows at the 7 a.m. low. And then this low over here is one of the most important lows over here. Now, if you guys have studied the daily profile video that I uploaded onto my YouTube, you guys will know that this low is a fake low of day. Why is it a fake low of day? Because it did not use any PD array on the 1 hour or higher time frame to actually sponsor this move higher to come take out this internal premium buy side, right? It didn't use anything to, make the market come all the way up to here, right? So it doesn't make sense. So it's a very sus low, and I'm expecting price action to come to at least the London low, which is the 1 a.m. low, which is pre-market low for London session. So I'm expecting the market to draw down into this area. And then if it keeps going under that low, then I'm expecting previous day low. And obviously, as you guys could see, and from today's price action, we obviously did not hit the previous day low, right? We closed under that London low. And then I was telling the group while we were live trading, I was telling them that this 5-minute fair value gap here is going to be the most important fair value gap, for one, because this fair value gap sent price to go sweep the London low. And if we are to deliver to the previous day low, which is down here, which is now relative equal lows, we should deliver from this 5-minute fair value gap. If we are truly bullish, we're going to have, an impulse, and an impulse above it, and we're going to inverse the 5-minute fair value gap to go to the previous end of this range. But I do not want to take a trade until one of the extremes are taken, okay? Until one of these extremes are taken. I do not want to look for a trade. I don't want to do anything until one of them are taken. It sucks if whatever. You're going to miss a fucking trade once in a while, right? That's the name of the game. It doesn't really matter. You have to plan the trade and trade the damn plan. It is what it is, and that's exactly what we do in our group. That's exactly how I teach. That's exactly the advice I like to spew out, is just be patient, bro. The market will show you where it wants to go. So you can see here, I mean, we literally did not do anything for like a whole hour, right? And you could see as soon as we close a candle body above the fair value gap that was being respected, we actually inverse it, right? And at this time, this is not the ideal time that I like to trade. I don't like trading after 11 o'clock or after 11:30. I just do not like it. And you can see why. I mean, we come all the way back down, again, close under that fair value gap, and then push right back up just in time for that 11:50 to 12:10 macro. And now here we start forming a BPR, which is a bearish fair value gap overlapped with a bullish fair value gap, okay? So we get that here. I did not end up taking this trade. Again, I wanted a previous day low swept first before I end up taking some sort of bullish trade. That's just my plan, and that's what I wanted to see. I don't like these relative equal lows. Do not like how smooth and nice these lows look. So I'm going to wait for those lows to be swept if they're going to sweep it, or I'm going to look for shorts and monitor the reaction after we sweep, you know, if we do get up to sweep the morning high and the previous day high. And obviously, you know, we get all the way up there. The market makes its way all the way up to previous day high and that morning high. And then here's where the juicy part starts coming in. So at previous day high with ES, we end up creating a SMT divergence. Okay, so the daily profile here was a London Judas and New York reversal. Now that has completed, right? The New York reversal has completed, and now we're coming up to previous day high. Now I want to monitor the reaction here. So if we go to the 4 hour really quick, you'll see that during Monday, 6 in the morning, that 4 hour fair value gap there. And if we go to the 1 hour as well, you'll see another big bearish fair value gap here, which is the 9 a.m. 1 hour fair value gap there, right? So you can see how price action pops up above there here at 1 o'clock. And again, we make that bearish SMT. And at the same time, we're pretty much retesting this high here, which is the change in state of delivery on the 1 hour on the NQ chart. So we're tapping into a POI, and we're tapping into that 1 hour bearish fair value gap that's been respected for the past 2 days. Okay, so using time frame alignment, we want to go to the 5-minute chart, and then we want to start monitoring. In this case, we want to start monitoring the fair value gap that actually broke the previous day high on the 5-minute chart. So if this ends up inversing, that's a good sign if we're looking for shorts, right? Because it's telling us the market is weak and that SMT divergence is going to be respected. But not only that, what I'm mainly looking for here on the 5-minute chart from that 1 hour POI is a change in the state of delivery on the 5-minute time frame. So what I'm looking for here is a body closure below the opening price of this first up close candle in the series of up close candles that sweep liquidity or is tapping into our time frame alignment POI. So if you guys don't know what time frame alignment is, I'm going to be making a video on it. It's very straightforward, but for example, like in this example here, it's basically when price action taps into like a 1 hour fair value gap, an order block, just any PD array or points of interest that you're looking at for a reversal. We want to go to the 5-minute and look for a change in delivery to confirm that the market is switching from, in this case, a buy program back down to a sell program that aligns with our draw on liquidity. So we have our previous day low over here, relative equal lows. We've tapped into that 1 hour POI, and this is where I alerted the low risk short here. And you can see it ended up working out beautifully for the rest of the day. Again, unfortunately, I ended up getting out down here, only making about 1,200, which is perfectly fine. But this would have been about over a 2K trade if I would have held all the way through to the last macro. But you can see here, as soon as we get a body closure below the opening price of this first candle, I don't need a market structure shift. A market structure shift is different. I just need a closure below the opening price of this first up close candle. So as soon as we get that, that's when I ended up alerting this trade here. Okay, I said triangle low risk short here, and I put it above the opening price of 2 p.m., right? So a lot of you guys maybe know this or don't know this, but generally speaking, when you're bullish, you want the candles to open lower. Okay, when you're bearish, you want the candles to open higher first. All right, you can see 2 p.m. opening lower into a bullish fair value gap. That's good. Now, if the market is truly bullish, it will respect the fair value gap that broke that high. This is an important fair value gap, and these are the fair value gaps that you really want to pay attention to. So 2 p.m. opening lower, doesn't respect it, closes below the threshold. The next candle closes below the opening price of this first candle in the series of up close candles, which confirms our change in the state of delivery. And then you can see how this fair value gap turns into an inverse. I alert the short there. I take it all the way down into these lows right there. Comes back again, sweeps that low. I'm out of there because 3 p.m. is opening lower into a bullish discounted fair value gap of this displacement range. So if I take my Fibonacci and I go from this low to this high of this intraday displacement range, you can see how this fair value gap here and this order block on the 1 hour is in discount. It's under equilibrium. So combine that with the fact that 3 p.m. is opening lower, I want to get out, okay? Because now we're changing delivery on the 5-minute, but this again was just a retracement up into a 15-minute fair value gap, and then the 1 minute started changing delivery again. That's an example of time frame alignment: 15-minute POI to 1 minute change in the state of delivery, and then it ended up delivering, towards that last macro, that 350 to 410 macro there. So that was the trade recap, and that's how I ended up making about $1,200 across all my funded accounts. And yeah, it was a pretty good day. Everybody ate. Everybody was green in the Discord. And if you guys want like my own framework and my own checklist, like my own personal checklist, like this one right here, I actually printed them out as a PDF. If you guys want this exact thing right here, like this unicorn rating guide that shows everything you need for an A+ unicorn setup, just go down in the description below. I've put a link down in the description below for these exact things, for my checklist, for my unicorn rating guide. And if you guys want to join a free Discord for 5 days, completely free, you can cancel if you don't like it. It's not going to charge you or anything like that. You can cancel before it charges you. But if you guys want that, and if you guys want to join a fucking bomb ass community, I don't want to glaze myself, but I kind of have to. I'm really proud of what I've built. But if you guys want to join a free community, or even a free, just completely free community, the Telegram description will be down below, and the free trial link for my Discord for 5 days will be down below in the description. But hopefully you guys enjoyed this breakdown of the trade recap. I will catch you guys in the next one, and I am planning a lot of YouTube content. It's coming, guys. It's coming. So trust me, I'm about to blow every educator out of the fucking water, and yeah, let's fucking get it, guys. Appreciate everybody watching the video, and I will catch you guys in the next one.